Jai Hind friends, welcome to the Stock Regiment. I'm Major Madhav. Today we are going to start a series for the beginners wherein you would be able to learn how to enter into the stock market, learn about the basic things that are required for you to read charts, understand trends and indicators. So, in today's video, we would be covering the topic of candles. After this video, you would be able to identify candles very easily and also identify the direction in which a chart is moving. So, you would be able to read the very basic things in a daily chart or a chart with different timelines. So, we would be covering the basics of candles and also how to place your charts in different timelines. So starting with the chart that I have opened on my screen, we have got a chart of the Nifty 50. There are different boxes that you can see here, one which are colored in red and one which are colored in green. There are two types of candles, a green candle and a red candle. So for our understanding, we would start off with the green candle. We would understand the four basic parts in a candle. To know what are the four basic parts in a candle, I would start off with covering a green and a red candle. So the difference between a green and a red candle is by the color itself. A green candle is a positive candle and a red candle is a negative candle. So in a green candle, you know that the price has gone up, and in a red candle, you know that the price has come down. Two important parts to a candle are the body of the candle. The colored portion that you can see in a candle is known as the body of the candle. The small lines and the thin small lines that you can see on the top and the bottom of a candle are known as the wicks of the candle. The top of the body of the candle is known as the closing of the candle in a green candle. The bottom of the body of the candle is known as the opening of the candle in a green candle. The top of the wick is known as a high of the candle in a green and a red candle. And the bottom of the wick is known as the low of the candle in a red and a green candle. The only difference between a red and a green candle is going to be in the opening part and the closing part. So in a red candle, the opening is going to be on the top and the closing is going to be at the bottom of the body of the candle, whereas in a green candle it is the other way around. The opening is going to be at the bottom and the closing is going to be on the top, indicating a positive move in the candle. Now that you've learned how a candle looks and what are the basic parts of a candle, you would be able to understand how to look at a chart and assimilate the direction of the chart. So when I look at a chart, I'm able to easily make out that the candles are indicating the flow of the price. So here I can see that the price has gone up and then come down and continuously trying to move in an upward direction. So here, if I draw a line chart along with this candlestick pattern chart, I would know that the direction is upward. Similarly, if I'm going to pull the chart a little back, I'm able to make out that the direction of the price is continuously coming down as I'm drawing a line along with the candlestick pattern. So two very basic things that you should understand when you look at a chart overall is that whether the price point is continuously moving up or coming down. So this gives you the overall direction and a broad understanding on which way or which direction the chart or the price is moving. This gives you the understanding of the movement of the market as well. Coming to the timeline of the charts, on the left corner you can see that there is a portion wherein I can select the time frame of this chart. Right now I have selected a daily chart. That means each candle is going to indicate the movement of the price in the entire day. If I'm going to change this to an hourly chart, each candle is going to indicate the movement of the price in an entire hour. So one candle would indicate the movement of price in an entire 1 hour. If I'm going to break down this to 15 minutes, it would further come down and show me the bifurcation of the entire day in 15-minute time frames. So you can see here that there is a dotted line which is indicating me the start of the day and the end of the day, and in between a candle is indicating 15 minutes. So every candle moving with the 15-minute time frame indicates how the entire day has moved for me with a 15-minute break. So the smaller the time frame that I choose, the more the number of candles that I would see in the entire day, and the larger the time frame that I'm going to choose, the lesser the number of candles are going to be. If I'm going to choose a time frame of a week, one candle is going to indicate one full week, the movement of price in an entire week for me. So very evidently, the larger the time frames that I'm going to use, the more is the number or the span of time is going to be covered on my chart. So now you see that I have selected a monthly time frame. That means one candle is going to indicate one full month for me. So wherein it is giving me an overall perspective or a picture of how the price has moved from 2016 till date. So I know that Nifty was moving in the range of 7 to 10,000 or 7 to 12,000, I would say, for a period of 2016 to 2020, and wherein now Nifty is giving me a complete up move and is around 17,000 right now. So giving me an overall understanding of how the market has behaved in the last 4 to 5 years. So two things that we've learned today: what are the basic parts of a candle and how do I read them when I look at a candle in an overall chart, and also how time frames work. So one more tip that I would want to share with you is that the larger the time frame that I'm going to choose to analyze my chart, the larger is going to be the time span of my investment. So the understanding or the result or the analysis that I'm going to do on a chart is going to remain for a larger time frame, because the analysis that I'm doing is on a larger time frame chart, and hence the outcome of my analysis would also be on a larger time frame. So if I take a daily chart, my analysis would be completely different and would not be valid as the same way the analysis has been made on a monthly chart. So monthly chart would give me an analysis wherein my outcome of the analysis would be in couple of months or couple of years, but when I'm doing that same analysis on a daily chart, the outcome would be in couple of days or couple of weeks. So we would emphasize more on this in the next upcoming video, wherein we would understand how the results play out and how the analysis is going to be showcased on a chart, and how we are going to understand the charts in a longer and a larger time frame. Thank you so much. If you like the video, please do like, share, comment, and do subscribe. Thank you so much. Jai Hind.